The man usually credited with inventing the first hydrogen fuel cell is Welsh physical scientist Sir William Grove. In 1842, Grove developed the world's first fuel cell, which worked in the same way as modern-day fuel cells, two electrodes sandwiched around an electrolyte membrane. Grove's invention, however, didn't produce enough electricity to be considered useful at that time.
Power and speed solves many things.
Fast forward to today, and hydrogen fuel cell technology is at the forefront of an energy revolution. However, the debate on its usefulness as a viable source of energy is still very much alive. One company has gone all in on proving to the world that hydrogen fuel cells are the future of the next energy revolution and that they have the remarkable demand of their trucks to prove it.
We're having a Rocktober sales event that's going into Rockvember.
They just had to double their outstanding share count, raise some cash, and they were good to go. On August 3rd, a proposal to increase the number of authorized shares of NIKOLA common stock was passed. Shares tanked shortly after the announcement. To make matters worse, Michael Loscheller suddenly stepped down as CEO, citing a family health matter, and had to move back to Europe. He will remain at NIKOLA as an advisor through the end of September to support the transition. Steve Gursky, chair of the board since September 2020, will take over as the new CEO. Gursky is NIKOLA's fourth CEO in just a few years. The high CEO turnover rate could be a red flag, indicating leadership issues within the company, but since the last CEO left for family and health reasons, and the one before that was nudged into retirement because he was selling too much of the company's stock, that can't be the case. On August 4th, NIKOLA reported its second quarter earnings, revealing a 26% larger net loss than the same quarter last year. Investors were not very impressed. Trucks built and shipped to dealers were also down compared to the same quarter last year. Gross margins slipped to negative 180%. Investors were even less impressed. That's okay though, because amid the slowing deliveries, NIKOLA generated $15.4 million in revenue, but revenue was also down nearly 14% from 2022. But who needs revenue when you can score big with over $50 million in grants from the government and various California agencies? Moving on, remember the mysterious truck fires that occurred earlier this year? The fires NIKOLA was quick to blame on foul play simply because surveillance footage showed someone was seen fleeing from a vehicle fire. Well, turns out they hired a company named Exponent to investigate the cause of the fires. The third-party investigation revealed a coolant leak inside a single battery pack as the probable cause of the June truck fire at the company's headquarters. The findings were further supported by a minor thermal incident that impacted an engineering validation truck parked at the company's Coolidge, Arizona plant on August 10th. After extensive employee interviews and hours of video footage review, NIKOLA concluded that foul play was unlikely to have caused the fires. The investigations also led to NIKOLA issuing a voluntary recall. NIKOLA's safety and engineering teams indicate that a single supplier component within the battery pack is the likely cause of the coolant leak, and efforts are underway to provide a solution in the coming weeks. In the meantime, NIKOLA states that trucks are still drivable, but urges customers and dealers of the electric Tre-BEV trucks to enable real-time vehicle monitoring. They also suggest parking trucks outside to allow for better connectivity with Fleet Command. On August 31st, John Vesco was appointed to the NIKOLA Board of Directors. I guess the market didn't care too much about this announcement because the stock closed down 7%. I really appreciate NIKOLA keeping with the theme here and calling their Q&A with the CEO a fireside chat. On September 13th, they hand-selected questions submitted for the Q&A via a platform developed by Say Technologies. NIKOLA promptly uploaded a pristinely edited webcast that investors could watch. The fireside chat was also later uploaded to their YouTube channel, but without the double vision CEO scenes. I'm sure it was just a simple glitch and they weren't trying to cover anything up. On September 15th, NIKOLA announced an expansion of its dealer network into Canada for its Class 8 truck sales and service coverage with ITD Industries Inc., a commercial trailer manufacturer headquartered in Toronto. Investors were thrilled to see NIKOLA now being taken worldwide. The stock ended the day on a 32% rally. The rally continued on September 18th when NIKOLA Corp appointed Mary Chan as the chief operating officer. The stock again closed the day up over 30%. As far as how high or low the stock will go, I'll start by pulling a slogan from their own website. Life doesn't get better by chance, it gets better by change. If investors are going to see sustainable returns on their investments, NIKOLA is going to need to change the trajectory of their current financials. They need to increase revenues, deliveries, and grow closer to positive margins. NIKOLA is pushing hard on customer demand being rooted in incentives, but right now only a handful of US states offer incentives to offset the cost of their trucks. 7 out of 10 provinces in Canada currently offer incentives for zero-emission vehicles, so maybe NIKOLA will expedite growth if they can get more dealerships to partner with them in Canada. The average analyst price targets are now at around $2.70 due to share dilution that recently took place. If it held $2.70 if I was trading the stock, I could see myself holding a portion of my position to $3 to potentially maximize returns. In terms of downside, it's usually not recommended to hold a losing stock beyond 20% down, but depending on your risk tolerance, you may even prefer to cut losses sooner. But based on 20%, if the stock is currently trading at $1.55, it's probably a good idea to cut your losses at $1.24. The next legs down could be $1.80 or even lower. You could argue that you're buying shares for the long run for future growth, but remember, once a company starts increasing their outstanding shares to keep compliance, they may have to do it again in the future. Never risk more than you can lose. I've said this before and I'll say it again. Just because a stock is cheap, that doesn't necessarily mean there's less risk. Well, that's all for today's video. Let me know in the comments what you guys think about the future of NIKOLA. If you made it this far in the video, science says you'll probably like my other videos, so don't forget to hit the like and subscribe button. Thanks for watching, and remember to trade gingerly.